And we are also still in the thick of earnings season out in India, and a couple of encouraging and impressive report cards to go through. First off, Mindspace Business Parks REIT posting a near 26% jump in quarterly net operating income, and that's thanks to strong leasing and stable occupancy. Its distribution per unit also grew about 13% year on year, and the REIT is remaining upbeat about strong office demand for Grade A spaces. Let's bring in our next guest to talk about this. That is no other than Ramesh Nair, CEO at Mindspace Business Parks REIT, who was smiling after that pretty impressive report card that they just issued. Ramesh, thank you so much for joining us today. And again, when I look at the broad strokes, or the broad strokes at least, it's hard to find something a weakness in the report card right now. If you could identify one dominating factor driving that impressive quarter, what would you say that is?
Thanks, JP. Good to be on your show. If I have to name one thing in the market, I think it's how the commercial office net absorption has been performing. We've just had another record quarter in the market. I was looking at the numbers for the first 9 months, calendar 9 months of this year. And what I noticed was office demand is up 29%. And in the last quarter, if you just look at the quarter 3, which just went by of the calendar quarter, office demand was up 23%. So demand driving the office markets in the country.
Okay, let's talk about that, because when you look at other major markets, like say the US or China, there's still a lot of question marks with regards to commercial office space, but it doesn't seem that India has those questions. Give us an idea of what the opportunity is there. Where is the stock for Indian commercial office space now? How much is expected to grow, and how does Mindspace plan to take advantage of the opportunities that this is perhaps showing?
So the Indian office market is basically 6 cities. We have a significant presence in 4 out of those 6 cities. It's the best performing. We have seen net absorption go up from 25 million square feet to 50 million square feet. We have seen gross absorption go up from 33 million to 75 million square feet. We have seen vacancy rates drop from 18% to 14%. So multiple things. It's today driven by global capability centers. Today, India has close to 1,900 global capability centers who are growing. What we have seen is annual growth of around 20% in the office market because of these reasons. Our focus currently is to grow in these 4 core markets where we already have a presence. Through multiple ways, we are trying to grow organically, where we have close to 7 million square feet, which is under construction. We have 1.8 million square feet of vacant area, which we will lease. We also have contractual escalations and mark-to-market rental growth, which happens on a quarterly basis. Inorganically, we are also acquiring from a sponsor group. We have third-party acquisitions, and we have consolidation happening within the parks. So this is our plan for growth.
Talk to us more about some of these acquisition plans that you have. Is the appetite for acquisitions perhaps growing, especially since we're looking at a global rate environment that might be easing lower and thus making borrowing costs a bit easier for REITs and property players to perhaps participate? Is the appetite, are you hungrier for acquisitions now, Ramesh?
So our interest costs, thanks to repo rates dropping in the last 6 months, have come down from 8.1% to 7.5%. Incidentally, on the acquisition front, we have acquired close to 3,300 crores of assets over the last 2 years. 1.8 million square feet as ROFOs from our sponsor, and 1.5 million square feet as third-party acquisitions. Whatever acquisitions we do, that should obviously represent a strategic milestone in our growth journey. We are constantly looking at expanding our footprints in the 4 key markets. We are also looking at other 2 markets where we don't have a presence, the Delhi and the Bangalore markets. We are always looking at premium, high potential assets, typical institutional owners, where there is scope for development, where there is scope for core plus value add. We look at all opportunities.
Okay, so you identified, so are you looking at markets like Bangalore perhaps as a 5th or a 6th, as a 5th destination? And when you go into these markets, or perhaps assess whether or not to go into some of these new cities or new markets, what are the key critical things you look for before you decide to pull the trigger on an acquisition there?
So 2-3 things there, JP. First is the seller profile. It has to more or less be an institutional owner. That's important. what is the infrastructure improvement potential, what's happening there, what's the current infrastructure there in that micro market. Also, any acquisitions should give long-term returns to our unit holders in terms of cap rates, distribution, NOI growth, GAV growth, mark-to-market opportunity. So these are some of the things we look at, Jim.
Okay, so Bangalore might be a potential fifth market in the future, but I wanted to zero in on something that was interesting and highlighted in your in the earnings release. You highlighted strong rental buoyancy, particularly in Hyderabad and Mumbai, two of your four markets. Why do you think these two markets were worth highlighting? Does that mean you love them more than Pune and Chennai?
So Hyderabad, JP, what we have seen is has clearly emerged as a tech GCC hub of the country. We're close to 400 GCCs who are there in Hyderabad. The micro market where we are in, which has around 70 to 80% of the demand in the market, has absolutely no land. That's pushed up around 1.5 years back. Rentals in that market used to be around 75. Today, that's between 95 and 100. We've been big beneficiaries of that. So Hyderabad, today, the best performing office market in the country.
Okay, and what about Mumbai? What's driving some of the growth there, and what's keeping you excited there as compared to some of the other markets you're in?
So Mumbai, 2-3 reasons. Massive efforts from the government to improve infrastructure. It's the BFSI hub of India. Massive availability of talent. Navi Mumbai, where we have a significant presence, is known for its quality of living, cost of talent, good social infrastructure, all that. So these are some of the things today helping Mumbai do well.
Okay, Navi Mumbai, and whenever I think of Navi Mumbai, actually, I think also about data centers, which also has been one of the growth trends we've seen out in India. You've mentioned the GCCs earlier on, but when we look at data centers, is this becoming a more prominent, is this becoming more prominent in the tenant mix of Mindspace Business REIT? And could we expect more data centers to figure into some of your business parks, either current or future?
So we have two large parks in Navi Mumbai, 50 acres each, that's 100 acres. We already have a portfolio of 1.7 million square feet of data centers. This will be around 285 odd megawatts capacity. Today, what we're seeing in the country is 50% of the capacity building in the country for data centers is happening in Navi Mumbai. We love data centers. They sign long-term leases. There are longer lock-ins. It's diversification for us. Out of the 5 data centers, 3 are under construction and 2 already delivered. So we have played the data center game. In the future, there are some land opportunities available within our parks for further data center building.
Okay, Ramesh, you've highlighted global capability centers here, actually, and it is something we've noticed also across other property plays in India. But again, there's still a lot of uncertainties that could come down the pipeline, such as, say, the HIRE Act that could impact outsourcing services out of India and the like also. Is the growth will the growth remain intact despite some of these new headwinds that could emerge 1 to 2 years down should the worst happen and the HIRE Act, for instance, get passed in the United States?
JP, today we have 1,900 GCCs in India. This that they occupy close to 280 million square feet. This 280 million square feet is expected to go to 540 million square feet. If you look at the cost of setting up a GCC in India versus the cost of setting it up in the US, we're talking of 20% cost. So it costs, if it's $100 in the US, it costs $20. Let's look at a worst case scenario. If the HIRE Act comes into play, that $20 could become $24 or $23. So India's cost benefit in terms of low cost of talent, which is 1/10, low cost of real estate, which is 1/8, will still continue, JP.
Okay, and just quickly, Ramesh, before we let you go, you also highlighted in the recent earnings that there were some development works and currently in Hyderabad. Can you update us as to where you are now with the current expansion and redevelopment works you have in that city?
So we have 3 projects which are under construction. One is nearing completion. We have one of the best clubs, what we're calling the Pearl Club, which is around 150,000 square feet. That's getting ready over the next 3-4 months. We have B1, which is a 1.5 million square feet building, which is getting ready around middle of next year. This has already been pre-leased to a global banking GCC. We have another building named B8, which is around 1.7 million square feet, which is going to be ready around the second quarter 2027. This 1.7 million square feet, we've already seen close to 5 million square feet of inquiries for this. So the market, like I mentioned, is the best market in the country today. So, and we are beneficiaries of that. Our total capex spend over the next 3 years across our portfolio in India is going to be around 4,100 crores. And this financial year, our capex is around 1,400 crores. So Hyderabad, all projects. And then we have a 500,000 square feet hotel/office project, which is again there in Hyderabad.
Okay, so Hyderabad, definitely the market to watch for Mindspace Business REIT in the future, and perhaps even Bangalore if the deal makes sense. Ramesh Nair, CEO from Mindspace REIT, thank you so much for joining us today on Inside India and for helping us, giving us more, shedding more light on that pretty solid report card that you had in the previous quarter. We're counting down to the market open now.